Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Had you been patient, though, however, and waited, you could say, well, we really didn't get a break of our ADX going above 25 until right about here. By that time, you can see the trend starting to reverse. So what would you probably have done? Not taken the trade. Move on to your next opportunity. Do you see how just by simply having rules and following those rules, creating these indicators, or following indicators that somebody else has already created. You don't have to go out and design your own indicator. By all means, use this one and play around with it. By having an indicator that you know inside and out how it works, you can really fine-tune and start to profile, well, where do some of those best trades come from? Maybe initially here when you get the sell short signal with %R, it took place at the end of August. ADX isn't at 25 yet, so I'm going to wait. But then it does reach 25 on into that second week of September. Then you can go ahead and go short on this pair. Go ahead and buy some puts. Then what are you looking for? Well, you're looking for one of two things to happen. You're looking for an exit signal on %R, or you're looking for your ADX line to stop reaching higher highs and rolling over. Either or, you still would have been profitable there. So look what took place here. On the screen here, we have another small one, as you can see on the right, I guess, that I'll go ahead and circle for us, but that's not a trade we would have taken either, because if you look at the ADX down here at the bottom, trending lower. Nothing we want to be a part of. So on the screen here for the yuck, we have 6 different signals that %R gave us. But we were able, just by adding another indicator in our DMI and ADX, able to take that down to just 2 signals. Now, I know some people like to be more active traders. If you want to do that, we're looking at a daily chart here, folks. So, drill down. Look at an hourly chart. Look at a 30-minute or a 15-minute chart. If you want some more activity, you can definitely do it that way. I like to personally look at the daily charts, take a longer-term perspective. That's why I buy plenty of time. I don't mind holding a position for a couple months if I'm profitable. I'll hold positions for years if I'm profitable, because all I'm looking to do is to be profitable. So as you can see, there's a lot of jagged opportunities here. We actually had a retest that took place for us in the September. Remember our retest rules from earlier? You can add to a position on a retest. So this is your new stop level. The high of this bar is going to be your new stop level. Any close above that is going to be a signal for you to exit. But here you would have been able to add to a position, add to a profitable position. How many people out there do that? Obviously, we know the cardinal sin of trading is ultimately adding to a losing position. But how many people actually add to a profitable one? I can tell you that the best professional traders do that. So always have that in the back of your mind. Is that something that I'm prepared to do? Do I know when, if I have a profitable position that's clearly trending, is there an opportunity for me to add to that position where I could even make more money off of that trade and still have my exit, my stop level clearly defined? Our %R indicator gives you a way to do that. As I mentioned just a few minutes ago, if you're not a big fan of taking a look at some of the longer term charts, you like to see some more activity, drill down to the hourly chart. Look at the Australian dollar. Now, this is where I've had a lot of profitability lately with the Australian dollar and the Canadian dollar, because those two currencies are really what you often hear referred to as commodity currencies. So a lot of their economy is based upon trading commodities. And when I say trading, I don't mean trading like us in terms of an active trader in front of a computer screen, but I mean the exchange of goods, imports and exports. So a lot of the precious metals and materials and that are around the world, and even some of the energy comes out of these regions, Australia and Canada. So when you start to see some price action taking place that is really bullish or really bearish in gold or in oil, go ahead and take a look at some of these commodity currencies. See if you're getting any signals there. Maybe if you haven't traded them yet, try paper trading them. Or just make notes for yourself. You know, I feel like I received a signal here on this date. At this particular time, I'm going to choose XYZ option because I feel like this is the best option for the situation, and then track it. See how profitable you would have been. Now, zoomed in here on the hourly, you can see there's a lot more gaps that take place. So you have to be prepared to deal with that. But what this also tells you is that a lot of the price moves that takes place in some of these currencies are going to take place right at the open, because that's where all these gaps happen, right? Sometimes you get some follow through where you get a gap one direction or the other and the price direction will continue. But if you look what took place in early October on the AUX, you get a gap down, and then it was really kind of flat from there. And you get another gap down, and it was flat for 2 days. And you get another gap down, and it was flat for another 5 days. And another gap down. Once again, you have to make sure that you're buying yourself enough time. You know, if you weren't really focused on what was going on here, all of a sudden you'd say, wow, you know, I'm already reaching expiration here. I need to go ahead and buy myself more time. So make sure that you're buying enough time up front. You have to be prepared for some of those gaps as well. When you're trading some of these shorter term time frames, you're going to get a fair amount of whipsaws, as took place here in late September. Similar situation would have taken place for us here in this middle section. So that is why I also have a daily chart here, because you can still capitalize on some of those gaps that take place. As you can see, based upon our %R indicator, you would go short the AUX in early October. Now look and see what took place here. We still technically, based upon %R, have not received an exit. ADX is rolling over. So we go ahead and pass and wait for ADX. It's back down below 25 right now at 24. So we'd like to see ADX turn back around in the other direction, really start to accelerate, which would also be accompanied by acceleration to the downside in the price action to give us some profits there. But the reason I wanted to look at the daily chart here is you can see this move that took place. There was a test and some hesitation around the support of the 200-day moving average right there. And that's where you get some of this choppy action with %R, where you keep getting multiple retests. And ultimately, we received an exit signal there. But look what happened right after that. Once that breaks, you get a strong acceleration to the downside. You see your ADX rising during that time frame. You do get 2 retest opportunities with %R where you can tighten your stops and add to your position. So there's lots and lots of opportunity there.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.